From FX Empire, this is Chris Lewis looking at the euro dollar for the 23rd, and you can see that President Trump's tweet certainly has had an effect on the market. He's suggesting that other central banks around the world keep their interest rates too low and the Americans raise theirs too quickly, and therefore it punishes the US dollar with strength, making us less competitive. He doesn't control interest rates, so I'm a bit surprised by this reaction, but okay. So we work with the market we've got. 115 has proven itself for me to be a floor at this point, and 117 and a half is the beginning of major resistance extending to 118 and a half. So really at this point, I think we may make a run towards 117 and a half. There's a lot of supply in that area. So, I don't think anything's changed. I just think we moved rather quickly over the last hour as I record this. I think we're still in a consolidation, kind of back and forth phase. There's a lot of problems in the EU, quite frankly, that people are unsure about. Brexit, the Italian government situation, the German government situation, which seems to have calmed down, but could flare up at the drop of a hat. Um, Immigration. I mean, there's just a ton of problems in Europe right now. The economic numbers aren't exactly fabulous. Meanwhile, the United States is growing rather rapidly. So, at this point, I think we continue to go back and forth. Even if we were to break above 118 and a half, there's a ton of resistance at 120. So I think this is going to be a back and forth market for quite some time. In the short term, though, it looks like we'll try to push a little higher before we find more supply.